Hi, my name's John Stevenson. I'm the Guaranteed Retirement Guy, and I want to talk to you about how much should you invest into an indexed annuity. So it's different for everyone. As you know, everyone has different needs, but we're going to talk about the different numbers right now and see how that might help you decide how much you need to invest into an indexed annuity. Now, I'm assuming just for the purposes of this video that maybe you're looking for income, and so I'm going to attach an income rider. Okay, the only difference would be is if you didn't want an income rider, then we just take it off. Okay, and it wouldn't provide you a ton of income. I mean, it could provide you income later on, but it's usually half of the numbers that we are about to look at. Okay, so if you see my screen, you'll notice that I am basing this off of $100,000. Okay, it's not very much. You're not going to get much income at age 65, and I'm assuming that you're going to put it in now and you're going to let it sit for 5 years. If you don't let it sit for 5 years, it's going to give you less income. But if you notice, the highest income right now is $10,000, $519 a year. And this is based off of joint income. If it's just you, okay, it's just a single, then usually it's a little bit more. Probably, if you look at it, it'd probably be, let's just look at it right now, $12,272. So another $2,000 a year in guaranteed income as a single payout. So let's look at this further though. And you're like, well, John, I have some money to invest, but I don't want to invest all of it. I just need a certain amount of income. Okay, well, let's look at actual income needs. Okay, so based off of that, we'll say you have $30,000 a year coming in from Social Security and maybe $10,000 from a pension. Okay, maybe you have a small pension coming in from somewhere. So that's $40,000. But let's say you need $80,000. Okay, you want $80,000 a year in income, and you've got $40,000 covered. You got your Social Security, you got your pension income. But now you want an extra $40,000. How much will an index annuity give you? Okay. Well, if you have an income rider, it's going to give you a lot. So let's look at this. So desired annual income, we will say $40,000. Okay. So if I look at $40,000 and I want it at 65 and I want to know what I need to invest right now, I'm going to need to invest $325,937. That's exactly how much you need to invest if you want $40,000 a year. Now, what if you want that $40,000 a year to increase every year? Well, let's look at that. We'll say increasing income at age 65. How much do I need to invest right now to take income at age 65? So 5 years from now. All right, so F and G looks like they are the top one, and they are giving you $423,604. That's what you need to put in. So a little bit more. So let's look at this here. So I illustrate this here for you. See if this increases. Oh, okay. This is just showing annual withdrawals for $100,000. But you can see it doesn't increase if there's no interest. I don't like that. I don't like that at all. Let's go down here, see if there's anything else. I think GLWB is pretty decent for that. I do like this. So look at this. Annual withdrawals, you notice they start out, and this is based off 100,000. Okay, so if we look at this, that goes up guaranteed regardless of the index. Okay, and if the index has growth, it goes up even more. That's great. That's what you want. So if you're looking for something that's going to give you a guaranteed growth rate every year, it's not going to give you as much as a level annuity would. Okay, a level payment, they typically will start out much higher. Anyway, so that's something that you need to make sure of. Let me just go in here. I'm just going to see. You can see the different index allocations. Okay. Yeah, and that's based off a single. I can do a joint payout, and obviously you'll get more. But you can see if you wanted to have $40,000 go up every single year, then you're looking at $671,000 with GLWB, and that's going to guarantee that $40,000 will go up with, it might be 2 or 3%. Okay, so it's going to go up with inflation, and you've got Social Security already. Maybe your pension is already going up with inflation, so everything goes up. So you've got your $80,000 a year at age 65, and it continues to go up for the rest of your life. So a lot of people, though, when they're looking at annuities, they will typically buy an annuity that gives them more upfront, because they don't want to wait 10 years for it to get up to the amount that they could get right now. So keep that in mind when you're looking at these. So if I went here and say, all right, well, $40,000 a year annual income, and I want it increasing, I need at least 423. But if I want guaranteed increasing, I need a lot more than that. I need 671,000. Okay. But if I don't care about increasing, I don't need as much income, right? With inflation, not all things are equal. Some things go up and some things don't. And so some of those might affect you. Some of them might not. So looking at that, I don't need as much. I only need $325,000. So what you might decide to do is put $325,000 into an annuity that pays out that 40 grand a year, and then maybe put a couple hundred grand into an annuity and have that start paying out another 40 grand in 10 years instead of 5 years. See, that's the way to ladder your income and get it to grow. Really, when you're asking the question, how much do I need to put into an index annuity? And if you're looking for income, meet with me. Okay, we'll go over exactly what you're looking for. If you need $100,000 annual income, okay, you can see a single payout. It's going to give you 100 grand a year, guaranteed, and you got to put 814,841. That is guaranteed. Okay, but let's say you're married. Okay, we'll change that and we'll say you're 60 and your spouse is 60. Well, you're going to need $950, so a little bit more, because the insurance company's on the hook for more. They're on the hook for 2 people now. So because of that, they got to give you that guaranteed $100,000 a year for both of you jointly. So if one of you passes away, it continues to the other spouse. So anyways, that's kind of how we do income planning. So if you're trying to figure out how much should I put into these, that's what we look at. We look at, all right, well, how much do you need in income? Okay. How much do you want in growth? We haven't even talked about MIGAs. Okay. What if you have a certain amount, a growth threshold that you want? There are certain fixed annuities. These aren't annuities for income. They're like CDs, but there are certain fixed annuities that will give you a lower rate of return based off of a lower premium. So they have low band, medium band, and high band. And that just depends on the premium levels that you put in. That will determine the rate that you are paid. But those are very much like CDs. Most people that reach out to me, they want the income. They want the most income possible from an index annuity. And that's why we're talking about it today. So if that makes sense, if you want to book a call, go ahead and do so. There's a link below this video, and we'll talk about your annuity options, exactly what you're looking for, and we'll craft it around your needs, whether you need income now or 5 or 10 years from now, whether you're married or not. Okay. So hope that helps. I appreciate you watching, and we'll see you in the next video.